Hi there and welcome back to another video. My name is Desmond Soon. I am a certified business appraiser and I have brought in with me today one of Canada's, in fact, Canada's #1 CPA, founder, business owner, entrepreneur, investor, business consultant, Josh Spurrell of Spurrell and Associates.
Thanks for the intro there, Desmond.
Yes, you bet. And now, Josh, the reason I brought you in for this quick video is because I get questions all the time from business owners who they don't even know that they can actually possibly sell their business. And do you mind if I pick your brain? Because I get these questions all the time, and I think if you could condense some really fast, impactful answers, it may give them something to think about.
Let her rip, Desmond. You know I love talking business.
Oh, I love it, I love it. So, #1. The first question we get, you're probably even thinking this yourself, and that is, how do some businesses get shut down without even knowing that they could have been sold? I see it time and time again. Guy worked in his business 30 years, 20 years, whatever it is. And they get to a point in their life, something happens. It might be tragic, it may not be, it may be tired, maybe time to retire, maybe they need to move, and then they have to shut down, Josh. And they sell it off, or sometimes they have to piece it out or liquidate the business. Is that necessary? I mean,
yeah, they get stuck in that business and they think of it as a job, not as an asset, right? And they don't realize it may not have turned out the way they wanted it to turn out. Maybe it was a little bit smaller, right? But they don't realize all of that hard work that they put in. It has a value. And what they don't realize is that there's usually some other guy entering the market who would value that as opposed to going a cold start. And these guys end up walking away from this asset. Meanwhile, there's someone else entering the market who could have used it and would have paid for it.
And they're business owners that may not have anyone to pass off their business to, no one legacy. I heard this one quote from another mentor of mine. He said, when in working with business owners, many times business owners just want to have that son or daughter to be able to pass off the business to, but they just don't have anyone that they feel safe enough to pass the business to.
Happens all the time. And then the sign closes, they take the business away, and then it's just shut down. It's gone forever.
Right. Another question that we get all the time, Josh, is how far in advance? Okay, let's just say hypothetically, someone might be watching this. It might be you that's watching this, and maybe you're not really looking to sell your business, or maybe you're one of those prudent types who's already planning in advance. How far in advance should a business owner realistically be planning?
Yeah, I mean, ideally, this is something that we should be doing 5 years out. But certainly today is always better than tomorrow when it comes to this. The more preparation, the better. I mean, 5 years out is definitely not too early to start considering. If they want to maximize the value of this thing, the sooner the better.
I've always heard that phrase. I think you might have heard this as well too. You don't want to start looking for an umbrella when it's already raining. And no one has a crystal ball, no one can say for sure. So if I'm 65 years old, for example, and I should be planning my exit now, legacy planning, succession planning, maybe whether I want to sell, whether I want to actually capitalize and monetize and enjoy the rest of my life, and go on and do other things that I may want to enjoy. Is that correct?
Today is better. 5 years ago would have been even better. Even if when you were 60, it would have been better. But hey.
So the good news is it's not too late.
Not too late.
Okay, good. Now, another question that's very common, Josh, is what can go wrong? Okay, so what can go wrong if a business owner waits too late? Let's talk about the other extreme. Let's just say, I'm busy, I'm working, we all know that feeling. I've been there. You've run several trades businesses. You've run, professional corporate businesses, and we are busy every day of the week. So we put it off and we put it off and we put it off. What's the risk of that?
Health issues can come up, #1.
Okay.
I mean, if you're healthy one day and all of a sudden the next day you're not healthy, right? And now you're selling from a position of weakness, right? #2 is we end up not being able to prepare the business for sale. So something that is predominantly in your head, a lot of times we need to get it onto paper to maximize that value, and we're just not going to have time if we wait too long. And there can be some adverse tax consequences that can come out of it too if we don't have enough time to plan for this transaction.
That's almost kind of the curse or the blessing that you have as a CPA, because you see this time and time again with your clients that you can actually foresee that they could have actually got more, but instead, because of that desperation, that short timeline, that unpreparedness, they ended up losing or getting far less than what they could have got.
100%, it happens, and it's unfortunate.
Okay, so next question we get quite frequently is, Josh, in your experience, is it difficult to sell a business?
It is extremely difficult to sell a business without any professional guidance. I mean, the vast majority of businesses never get listed to begin with. They're never even on the market.
What do you mean?
Well, they just closed their door one day. They don't realize they could have sold it, or they waited too long, and then it became impractical because of a health reason or something forced them to shut.
Yeah, it could be many times, we think as business owners, we think we're invincible.
Yes.
We think our health is going to prevail forever.
Yes.
I'm not trying to be morbid, but then maybe we are healthy. What if it was someone close to us? I've seen this happen where it was a spouse or a child that, and this business owner really was so torn between their business and having to have the time and the finances to look after that loved one, even though it was pretty terminal towards the end. So is that what you're talking about? Like, being able to be prepared, list it, and then now I'm hearing that you're saying, what was it, 20%?
Yeah, only 20% are actually, so there's a very few of the businesses out there that actually ever get listed for sale. And then the ones that do get listed for sale, only 20% of those are actually ever going to sell. So all of those business listings that you see
but
out there.
there's tons of those listings, like sell your business on, there's all these different websites you can, so you're saying that if there's 100 businesses that need to shut down or they want to sell, only 20 of them will actually get sold.
That's right.
And that begs the question, are they even being sold for the price that the owner wanted?
Generally, they're forced into it. It's a buyer's market, and that's just the demographics of the deal that we're dealing with right now.
Okay.
So.
Is it easy then? Let's flip to the other side of the equation, right? So I'm a seller. In order for that equation to work, I need a purchaser. So is it easy for a purchaser to purchase my business, or do they need financing? What do they need?
No, it's not easy to obtain that financing. So a lot of people think that, it's like going to the bank to get a mortgage on a house. Right. Those are very formalized processes. The bank is going to learn a prescribed amount based on the valuation of the house. When it comes to buying businesses, and particularly small businesses in Canada, it is very, very difficult to get financing. So you might have a business out there that legitimately is worth $100, $200, $300, $400, $500,000, but the bank does not want to lend based on that value. And so it is very difficult for the person who's coming in to purchase it to get the financing. So again, it requires some professional guidance to maximize the financing that you can get,
right?
Versus other forms of structuring the deal.
Absolutely. I mean, myself, even Josh, we're both certified appraisers.
Yes.
We've gone into business. There is enhanced valuing, there is fair value, there is there's all kinds of different valuations methodologies, and even as an accountant, as a CPA, there's many different ways to value the business.
Yes.
Most business owners underestimate what their business is really worth, right?
Yes.
And for the purchaser, many of them think they have to use their own cash when the reality is they can actually get the financing if done correctly.
That's right.
But trying to do it themselves is hard.
It is.
Okay.
It is.
Okay.
It is.
So then that brings me to the next question. Is the conventional valuation process appropriate in order to receive that financing?
The valuation process that people are defaulted into is generally the valuation process that would be advisable for the businesses worth more than $1 million.
Okay, say that again.
So the valuation process, the default valuation process, is normally the valuation process that mid-size and large companies, would benefit from. $1 million or more.
I'm going to say something really crude here. So that means if my business is under $1 million, I'm kind of shit out of.
If you're defaulted into the wrong valuation process. So if you just accept the default valuation process, you're going to probably be left in the dark, and the purchaser's going to be scrambling, and they're not going to be able to get the financing that they need. The conventional valuation process is actually normally the wrong process for small businesses.
I got a couple more questions for Josh. So stick on all the way to the end here, but comment below already right now if you found these initial questions helpful, or maybe you want some more clarity on them. I will make sure that Josh goes into deeper detail if it needs be. So moving on, Josh, I've got another question here that I get all the time is how can someone like myself, I've been in the appraisal business for quite some time, valuing businesses. There's always, just like selling a house, sometimes you have a broker that helps you do that. Is it valuable? Is there value in having a broker help you in this process?
Yeah, someone like yourself functioning as the broker. I mean, let's make sure we get the right appraisal in place that a purchaser is actually going to get the type of financing that they want. They're going to help with that. What are the documents that this vendor, the person selling the business, is going to need to assemble. How are they going to gift wrap this business that they're going to achieve the highest price possible for? A broker is going to walk them through that. And then most importantly, getting it in front of the right eyeballs, who are the people who are actually going to buy this business. It's the critical step.
That's correct, right? So you've got clients that want to sell the business. You will normally seek out the services of, it doesn't have to be me, it can be another broker who does a proper appraisal, because a correct appraisal will then help me to go back to the purchaser and get the most financing. Is that correct?
You got it.
And then in doing that, you as the seller, actually, instead of having to liquidate your, and because you're in a rush, and we all know this, when you're in that desperate position, people are going to come in and lowball for that hard equipment that you worked hard for, and it's in perfectly working condition, but you're not going to get real fair value for it. So having a good appraisal on it, having that person help you go, give you the content to go to the bankers or go to the purchaser. Now the purchaser is motivated because now they get the financing. It's a win-win for everyone. Right, Josh?
That's right.
And you're behind the scenes as the accountant, you're processing all of that. You're providing the banks with the right information as well too. So it's a team effort to actually get this done.
That's right. It is. It is.
Last question, Josh, if you don't mind. I know you got to get going. It's a busy day for you. But what is likely? This is something most people never think about this. But what is likely to go wrong if a seller tries to do it themselves?
If you try to do it yourself, you're probably going on one of these listing services, and then you're answering. If you get any queries at all, a lot of times you're answering queries from tire kickers.
Right.
These aren't people that are serious about buying your business, and you're going to spend forever going through with these tire kickers, asking for information that you probably don't even have the appropriate package to give them.
Right.
That's because that package is something that the broker needs to help you assemble. And then, you're probably never going to get it in front of the eyeballs of the people who are actually going to pay top dollar for the business.
Yes, they don't value. This has probably been your business for, like I said, several decades. It's your baby. It's no different. Anyone who's ever, sold a used car, you probably know what we're talking about here. You list it, and some, the tire kickers come in, or the low ballers come in, and they're going to just get it at the lowest price. So you are not going to benefit from that. And then what happens is it transfers off to someone else who does not care. Maybe they're going to rip it apart. Maybe they're just going to flip it, and so having that support, that team, really makes a difference. Well, we want to wrap it up here. Hopefully that answers a lot of your initial questions. If you'd like to find out more, feel free. We'll put a link somewhere around this video here. Reach out, get in touch. You're probably watching this video because maybe I might have even sent it to you just to help answer some of those questions. I will connect you directly with Josh. You can deep dive with Josh. In fact, Josh, you've been known to even provide one-on-one consultations with 100%. Business owners who are serious, not tire kickers, who are serious about this, where you're actually planning out that future. You don't want to wait until the last minute. Josh, can you commit to that? If I am to get introductions from here and they need to speak with you, would you be open to actually speaking with them?
100%. Our goal is to help Canadian businesses beat the odds. So if you're serious about it, we don't want to see your hard work go to waste, because it's twofold. It's your hard work. There's also someone new entering it who needs that asset. It's a win-win for both parties, and we're happy to do.
They could be that son or daughter that you never had, that you can pass the business on to and have peace of mind knowing that someone's going to continue the legacy for you. With that being said, we'll see you in the next video.